Welcome to the Crypto Prism channel. Let's take a look at Bitcoin's latest price action. Now, from the current 1-hour structure, yesterday's decline was an acceleration move in line with the trend. Price was moving along a descending channel and formed effective support at the lower boundary of the channel. The lowest point reached 71,800. Then it quickly moved back inside the channel. This indicates that the lower boundary was not a one-time effective breakdown, but rather a short-term collective short covering move. However, it's important to note that the current rebound strength is very weak. Today, price directly and effectively broke below the lower boundary support of the channel with a low near 71,500. Although short-term funds later pushed a minor rebound, this was only short covering and a technical bounce after the breakdown, not a stabilization or reversal signal. At present, price is still suppressed below the original lower boundary of the channel. The rebound strength is extremely weak, and the K-line center of gravity is completely below the channel midline. This pullback repair is essentially a retest confirmation after the breakdown, not a trend reversal. Next, we focus on two key levels. First, the 71,800 to 71,500 area that was just broken. The original lower boundary of the channel has completely shifted from support to resistance. Second, the new low break at 71,500 is the new short side acceptance area. If the subsequent rebound lacks strength and fails to reclaim and hold above the original lower boundary with strong volume, and upper wicks appear with shrinking volume and stalled price action, then this rebound will be a clear secondary shorting signal. Price will fall again, most likely refreshing the lows, opening further downside space, directly targeting 70,500 and the 70,000 psychological support level. Only if price expands in volume and consecutive solid K-lines close back above the lower boundary of the channel and firmly stand above 71,800 can the short-term stabilization and recovery continue. Otherwise, the breakdown is confirmed and rebounds are shorting opportunities. The short-term bullish structure has completely failed. Now let's take a look at the daily chart. On the daily time frame, the current market has shifted from a primary uptrend into a stage of rebound and further decline within a primary downtrend structure. After topping up the previous high of 126,200, a continuous decline followed. Price first broke below the support of the previous ascending trendline. The trend has shifted from bullish to weak. Subsequently, at 0.5 and 0.618, these two key retracement levels both failed to rebounds and were broken consecutively. This shows that the medium-term capital defense levels were penetrated step-step. The market has therefore entered a more bearish repricing process. The current price is around 71,000, positioned below 0.618, but has not yet fallen to 0.786. Therefore, my current judgment is that 0.786 will determine whether it can become a medium-term breaking level. You can see it. If the decline continues here, it will test 0.786. This is a structural target level. On one hand, it is the 0.786 retracement level. On the other hand, it is the lower boundary of the previous consolidation's high-volume trading zone. It naturally has characteristics of chip redistribution, and may easily produce a wave of stabilization and rebound. However, it's important to note that if price reaches 0.786 and rebounds, but volume fails to follow, and the K-lines show quick spikes and pullbacks, instead of consecutive 2 daily closes above it, then it is most likely a weak rebound, providing a second shorting opportunity. After that, we may continue to see a move down toward 0.886 or even test deeper, panic-driven liquidity zones. Next, I believe the bearish path is for price to continue holding below 0.618 and operate downward. In that case, all rebounds belong to corrective moves within a bearish trend. The priority is to focus on the main 0.618 retracement level, the pullback resistance level after the breakdown. If within this range. The daily time frame shows upper wicks, consecutive bearish engulfing candles with expanding volume but stalled price action. This would be a typical pullback confirmation signal. Then we prioritize targeting 0.786 with a target level around 66,000. If both lines are broken and price cannot close back above them, then we look towards 62,000 and around 60,000. The extreme reference is at 0.886. This is a highly risky area for price to reach recently, with relatively low probability. On the 4-hour time frame, we can see this segment of price structure is very clear. Previously, there was an ascending channel, with gradual lifting upward. However, price later showed exhaustion at the upper boundary of the channel, then pulled back, broke below the lower boundary of the channel, and formed a typical post-breakdown failed pullback. followed by accelerated decline, a bearish path. The current lowest point has reached 71,324. The 71,872,000 short-term first layer support and previous low resistance area has been completely broken, and defense has failed. There are no signs of stabilization or support on the chart, nor any technical rebound after the breakdown. The original channel lower boundary at 78,000 to 82,000 has turned into long-term strong resistance, while the recently broken 71,872,000 has shifted from support to the first resistance on rebounds. Any minor bounce afterward is merely oversold repair and is unlikely to break through and hold. There's no effective short-term support below. The market has directly entered a bottom-seeking phase, targeting the deeper structural support zone of 65,000 to 67,000. Only there does it have the foundation for a large-scale stabilization rebound. For the market to stabilize and shift into recovery, it must show shrinking volume stabilization and expanding volume recovery near 65,000 to 67,000 and reclaim and hold above the 71,800 resistance level, forming consecutive solid bullish candles. Before that, the 4-hour bearish trend will continue to dominate. Alright, that's all for today's video. See you tomorrow.